So first and foremost, thank you everyone for joining us for today's webinar, Shopify VAT Simplified, Accounting Advice from the Experts. I'm particularly excited about this topic because we're going to go quite deep and we have some incredible speakers for you here today. Those speakers are Steve and Oliver Blackmore from Elver E-Commerce. They've been really trailblazing the e-commerce accounting space for quite some time. I'll let them dig in a little bit more into their practice and into why they're so passionate about this topic, not just Shopify VAT, but e-commerce accounting generally speaking. We also have Elspeth Cordray, who's A2X's new UK go-to-market manager. Elspeth actually started her journey as an e-commerce bookkeeper and then led the A2X support team in the UK for roughly the last 4 years. And in her new role is going to be working more closely with our accounting and bookkeeping partners. And my name is Jeff. I'm the head of marketing at A2X. I'm just going to be your host for today's webinar. So I'll go over the agenda. So I talked about how we have some incredible speakers. I'm actually going to let Steve and Oliver talk a little bit more about Elver. I want to say, first and foremost, thank you so much for your generosity and sharing your expertise with all of us today.
That's all right. Thank you, Jeff. We're chartered accountants specializing in e-commerce. If you're attending this webinar, you probably already know that e-commerce businesses face challenges which, with regard to accounting and tax, that other businesses don't face, and that e-commerce is complicated. But the aim of this webinar is to simplify that as much as possible. We have over 100 e-commerce clients ranging from startup to 15 million turnover, multi-channel, selling internationally, and we provide all the services you would expect from a firm of accountants, from bookkeeping and payroll to international VAT and GST, compliance to virtual finance director services. Vision is for every e-commerce business in the UK to be armed with precise financials and insights, empowering them to run successful, growth-orientated operations.
Fantastic. Thank you so much. What's really cool is we get thousands of e-commerce businesses coming through our door, and we have full confidence that when we refer them to Elver, they're going to be able to help them with the compliance, paying the right amount in VAT, and ultimately saving money down the long run. From an agenda perspective, as you can see here, a lot to cover. So first and foremost, we're going to level set and provide a quick overview on VAT compliance on Shopify. We're going to talk about VAT registration, VAT settings in Shopify, how to record VAT, paying VAT, software, international sales, dropshipping, you name it, we're likely going to be covering it. And if we're not, then please feel free to ask your questions. So without further ado, I'm going to pass it over to our speakers, but I will make mention of one thing. The information in this webinar is meant to be educational and informational in nature. It can be quite general because everybody's situation is quite unique. So want to make clear that we definitely recommend consulting with a tax expert to understand your business's specific VAT requirements. So without further ado, Elspeth, I'm actually going to go ahead and pass the mic to you so we can get into the nitty gritty.
Hi, everyone. First of all, we're going to do a quick overview of VAT compliance for Shopify merchants. So the first thing that we need to kind of think about is what are we required to do as people selling on Shopify? And the first thing to know really with Shopify is it's a little bit different from Amazon, eBay, and Etsy. In some cases, they're required to collect and remit the VAT on your behalf. But on Shopify, they're not responsible for doing that. As a Shopify merchant in the UK, you must register for VAT if your turnover exceeds £90,000. And if you are VAT registered, VAT must be collected from customers at the point of sale. So Shopify allows you to set up different VAT rates for different product types and destinations, and you can do all that in your store settings. And that's quite adaptable depending on your VAT requirements. But you do need to know that Shopify payouts will include VAT transactions if you're collecting tax from your customers, and you need to make sure that you're recording those correctly. When do Shopify merchants need to register for VAT? In the UK, the VAT registration threshold is £90,000. Shopify fees count towards this threshold as they are subject to the reverse charge mechanism. And I think Steve's going to speak to that a little bit more further into this webinar. For sales below £90,000, registration is optional, but it can be beneficial if a business wishes to reclaim VAT on its purchases.
Just adding in there that the 90k threshold is on a rolling 12-month basis.
And then what do you need to do once you're registered for VAT? One thing that you need to do is you need to understand different VAT rates as they apply to your products. So, for example, are you selling children's clothes? Are you selling books? Are you selling some food products that may be zero rated? And then once you understand all that, you need to make sure Shopify is charging and collecting VAT correctly. And you also need to provide VAT invoices to customers if you're asked to. And then further from that, you need to keep accurate records of all this VAT that you're collecting and make sure that you file your VAT returns in a timely fashion and remit that VAT to HMRC. I'm going to hand over to Oliver here, and he's going to walk us through all the different VAT schemes that you could be enrolling in the UK.
Okay, so there's actually quite a few different VAT scheme options available. We're going to focus on 6 of those today. We can first get the first 4 of these. We've got the standard, flat rate, cash accounting, and margin. These are all quite different in themselves, but the thing that they do have in common is that they generally result in quarterly returns being filed. So the standard scheme is what would be the default position if you don't apply to one of the other schemes. And that puts you in a position where you account for VAT on all your sales, account for all the VAT on your purchases, deduct that VAT on your purchases from the VAT on your sales, and the net of those 2 figures is what you need to pay for your quarterly VAT bill. The flat rate scheme is intended as a simplification scheme for small business owners. So on the flat rate scheme, you don't need to worry about accounting for VAT on your purchases in most cases, but you instead just pay a flat percentage of gross revenue as your VAT bill each quarter. The most common VAT percentage to pay for an e-commerce business owner would be 7.5%. However, it's important to note that 7.5% isn't directly comparable to the 20% that you pay on the standard scheme, because that 7.5% is a percentage of gross turnover, so is the equivalent of paying 9% of your net revenue. Having said that 7.5% is what an e-commerce business owner would generally be paying, you may be able to use a lower rate if, for example, you're selling food items, then the rate there would be 4%. And there is also a 1% discount in the first year of using that scheme. To be eligible, as it says on the screen there, you need to have turnover excluding VAT of less than 150k to join the scheme, and you need to expect that 150k or less turnover to continue for the following 12 months. Then when you get to the anniversary of the scheme, you need to review whether you expect your turnover, including VAT, to stay below 230k over the next 12 months. It's just important to differentiate those 2 thresholds. One is excluding VAT, and the exit one is actually including VAT. So moving on to cash accounting, this isn't a scheme in itself as such, it's more as a variation of the standard or flat rate schemes. And the main difference here is that you're accounting for sales and purchases when they are paid rather than when the invoices or transactions are dated. If you think about the sales cash process for a typical Shopify business, you're typically raising a sale and getting paid at the same time. So there's no real difference in when you would pay VAT on your sales, whether you were on a standard or cash scheme. However, as a Shopify business, you may have suppliers that offer you credit, and therefore by using the cash accounting scheme, you would actually be delaying to the point at which you can reclaim VAT on your purchases. So it's unlikely that as a Shopify business, cash accounting would be positive for your cash flow. The one exception to that might be if your Shopify store is focused towards wholesale orders and you are offering your customers credit, in which case if you are offering lots of credit to your customers, then cash accounting would likely make sense because you're delaying the point at which you need to pay VAT on your sales until when you actually get paid. There is a turnover limit of 1.35 million to be eligible to use cash accounting. And once your turnover exceeds 1.6 million, you do need to leave that scheme. The next scheme I wanted to talk about was the margin scheme, but this is only relevant if you're selling second-hand goods. And it comes into play because you won't generally get a valid VAT invoice from anyone that you're buying goods from if you're buying second-hand goods. So what happens on the margin scheme is essentially you're just accounting for the VAT on the markup you've applied to each product that you sell. So for example, if you bought something for £100 and then you sell it for 130, you've got a £30 markup there and you would pay £5 of VAT on that markup. So that covers the sales and COGS side of your P&L, and then any overheads that the business incurs, you would account for VAT and reclaim the VAT on those as normal as you would under the standard scheme. It's important to note that there are more onerous record keeping requirements to use the margin scheme. So you need to be able to trace each purchase through to a sale in order to know exactly what margin you've made on that sale. There are two variations of the scheme as well. There's the standard scheme and also the global accounting scheme. The global accounting scheme would be suitable for most Shopify sellers. It's a simplified version of the standard scheme and reduces the volume of data you need to maintain around who you're buying your goods from. But it does have a purchase price limit of £500. So if you are buying individual items at more than £500, then you would have to use the standard scheme. The next two schemes to talk about are annual accounting and monthly returns. So these mostly just impact the timing of when you file your returns. So on the annual accounting scheme, you are filing an annual VAT return, but you still need to make quarterly installments towards your VAT liability, and they're based on the VAT liability you had for the previous accounting period. So that gets you in a position where at the end of your 12-month period, you've got a bit of a mountain to climb to get your VAT records up to date and file that annual return. So we wouldn't generally recommend using it for that reason, because a quarterly return means you can keep on top of your bookkeeping more easily throughout the year. And the other downside is that throughout that year, you're paying installments that might not necessarily tie in with your actual liability come the end of that year. So you could end up with a big refund or a big additional amount to pay. So keeping on top of things quarterly avoids that big surprise at the end of the year. We don't actually have any clients that use annual accounting for those reasons. And then finally, you've got monthly returns. So to be eligible to file monthly returns, you need to be consistently in a refund position on your VAT returns. So that's where your VAT incurred is more than the VAT you've charged on your sales. And the benefit of doing that is that you're filing a return every month and therefore getting those refunds once a month rather than having to wait a whole quarter to get the VAT back. So back over to you, Elspeth.
That was a great overview, Oliver. Thank you for that. Okay, we're going to run through VAT settings in Shopify quickly, just in case you need to access these. Shopify doesn't collect and remit VAT for you, but it does have features that enable you to charge the correct VAT amounts to your customers. You can find these settings down in taxes and duties under settings in your Shopify store. And that's where you can set up all your tax rates for your different zones. The tax settings in Shopify need to be individually set for applicable countries, so countries where you need to be collecting tax, and product variants, so standard rated products as opposed to 0 rated products or special 5% rated products. If you've got a country set to not collecting tax in Shopify, so I don't know, sales to the US or something like that, then you would see product sales not taxed coming through in your Shopify payouts. You'll see basically two sets of sales categories. You'll see product sales excluding tax. This is revenue from the sales of goods or services excluding tax, which is split out in the tax category. So those would be your sales where tax was applied. And product sales are not taxed is a revenue from the sales of goods or services where no tax was charged. So for example, your tax-free sales. Another thing to keep an eye on is always your shipping tax rates. In Shopify, you can go to Shopify admin settings, taxes and duties, and scroll down to the tax calculations block down at the bottom, and you will see the shipping tax options there. The next section is how to record VAT correctly. Here we can see a breakdown of a Shopify payout. This here is the deposit that you will see on your bank feed. So this is the amount that will have hit the bank. And we would see some people that would reconcile that directly to sales. But obviously we know that isn't going to be correctly accounting for all the different types of transactions that have occurred to get back to that number there. And so what we do in A2X is we'll break that down into the correct accounting categories. That number may be made up of sales, shipping income, VAT that's been collected, gift card liabilities, pending payments, disputes, and also Shopify fees will be deducted from the amount that hits your bank account. Okay, to record your VAT correctly, you need to make sure that you've got standard rated, zero rated, and reduced rate products set up correctly in Shopify. There are options to do that on the product listing. You need to have the correct settings for shipping VAT. And if you've got EU VAT as well as UK VAT, you need to have a good method for splitting your UK VAT from your from your EU sale VAT. And sometimes you may have US sales tax. Now, that is one of the good things about A2X is we will split that all out for you. We've got an onboarding flow that will ask you some questions and then give you the correct splits. Generally speaking, if you've got EU VAT, you'll split it into its own liability account or potentially separate liability accounts by country if you're doing your own one-stop shop return. I was going to get Steve to jump in at this point because we do note that Shopify fees are generally subject to the reverse charge mechanism. And I think he was going to speak a little bit to that because it's quite important.
Yep. So the reverse charge mechanism applies to any cross-border service. Shopify invoice from Ireland. So if you're in the UK, then that classifies as a cross-border service. So Shopify will not charge you VAT on those fees. And what the reverse charge mechanism is meaning is that on your VAT return, you have to account for the VAT that Shopify would have charged you had they charged you UK VAT. But at the same time, you claim it back. So it actually results in two entries on your VAT return. One where you're accounting in your sales VAT box for the VAT that you would have been charged, and then in the purchase VAT that you're reclaiming the same value. And as was mentioned earlier, that's why it can have an impact on your assessment of whether you have reached the £90,000 registration threshold, because it's actually adding income on top of the actual real income that you get from your customers.
All right, thank you, Steve. So here we've just got a quick screenshot for you here that shows how we can split sales by country. So if you need to split out your EU sales, for example, or your EU tax, you can do that using A2X quite speedily. Okay, so some VAT transactions to watch out for in Shopify. Payment gateways, you quite often will be using clearing account transactions, posting a debit to a clearing account for gross sales for the day. And these generally have no VAT rate because we'll already have posted the sales with their accompanying VAT. Shopify fees, as we've just said, are usually billed from Republic of Ireland and are generally reverse charge for UK sellers. Refunds generally mirror the tax rate on the original sale, and that's kind of what you want when you process a refund. We do see some edge cases where the refund doesn't have tax treatment applied, and we think this is generally occurs when just a general refund has been issued to an order. And so we do generally recommend that you issue refunds by product type, because that will mean that Shopify will clock the correct tax treatment on the refund. Gift cards, this can vary and be complicated depending on whether it's a single or multi-use voucher in the UK. I think Steve's going to unpack that in just a second because it's quite important. You can speak to an advisor or A2X's UK team if you have custom requirements around gift cards, because we do have some different workflows that we can put in place. But Steve can maybe just explain a little bit more about gift cards and how they work in Shopify.
Yeah, it's mainly an issue of timing. If you're selling in the UK and all your products are standard rated, then you know that when that gift card is redeemed, it will be redeemed for a standard rated product. And in those circumstances, you would account for VAT when you actually sell the gift card. However, if you have products that are zero rated, for instance, or a mixture of products, and therefore you cannot determine at the time that you sell that gift card what the gift card is going to be redeemed for, then you would account for the VAT on the gift card when it's actually redeemed based on the product that has been used, that the gift card has been used for to purchase.
That's great, thank you. And then we're going to talk about a little bit just about paying VAT, but I think Steve's going to tell us about this as well and his real world experience with some of these things.
Okay, so VAT is due 1 month and 7 days after the quarter end. Although, of course, if you're doing monthly returns, it would be after the end, same period after the end of the month. It is payable at the same time, but the easiest way to pay is by direct debit, which you can set up on your government gateway account. And in those circumstances, the direct debit is actually taken 3 days after the normal due date. If you are due a refund, then typically, actually, I would say it's more like 2 weeks to obtain a refund. But if it's your first return, for instance, and you're claiming a refund, there is a very high probability that HMRC will ask you for additional supporting information, which is going to be the copies of the purchase invoices or the largest purchase invoices that cause that refund to be claimed. And there will be several weeks delay before they ask for that information. Then, of course, you've got to provide it and then wait for them to verify it. So a refund on a first return will always take longer. Equally, if you normally pay VAT, but for whatever reason you file a return that is a repayment, that might also result in the same inquiries and a similar delay. This is me again, right?
Yeah.
So the core of our app stack is Xero, A2X, and an Apron. Xero is our preferred accounting system. It's user-friendly, so easier for our clients to navigate, and has a wide range of a wide-ranging ecosystem of connecting apps. By now, you probably all know what A2X does. It is the core of everything, the heart of everything we do. We're a gold partner, and we simply couldn't do without it. And the support that we get from A2X is second to none. Apron is used to process purchase invoices. Invoices are sent to Apron, uploaded, or you can take photos with a smartphone app. And Apron uses optical character recognition and AI to extract the information from the bill before sending it to Xero to create that bill, along with an image of the actual bill. It will extract the correct batch from the bill and provides a detailed description of the products or services that have been purchased. And it saves us time when reviewing transactions in Xero. Moving.
All right.
Sorry, that's me again, isn't it? Yep.
You're in the spotlight.
So international VAT is one of the most complicated aspects of e-commerce. If you're selling in territories other than the UK, it's likely that you will have VAT or GST. GST stands for Goods and Services Tax and is essentially the equivalent of VAT outside of the EU. So yeah, you're almost certainly going to have obligations in other territories, and each of those will have their own rules. We can only really scratch the surface in a webinar, but broadly, in most territories, there will be a registration requirement if you hold inventory in that territory, and each territory will have thresholds that trigger registration, and in some cases those thresholds can also be based on the volume of orders, not just the value of those sales. In terms of the major territories you're likely to trade in the EU, there are multiple options dependent upon from where you fulfill your orders. If you're fulfilling from outside of the EU, then you've got a number of options. One is the IOSS scheme, which is the Import One-Stop Shop, and that enables you on a single registration to account for all of your sales to the EU on one return, but you're identifying the territory of all your sales and the amount of VAT that's due to each territory. You make one single payment, and wherever that payment is made to, they then distribute the funds to the other countries. You can only use that if the value of your orders is less than 150 euros. Alternatively, you could enter into an arrangement with your carrier whereby they pay the import VAT at customs on your behalf and then bill it back to you. All carriers will charge a fee for that service, which is usually a per order fee, and that varies quite considerably from carrier to carrier. If you're just starting out in the EU and your volumes are low, then I would say that's an ideal way to start. But as you scale and the volumes become larger, then that per order fee is likely to be excessive when compared to using the IOSS scheme. If you store inventory within the EU and therefore fulfill from within the EU, as I said before, that will trigger a registration requirement in that country. But then there's a similar scheme to the IOSS, which is the OSS, which then enables you on one registration to account for your sales VAT to all the other countries. Another major marketplace is the USA, and each state is a different territory, each with its own thresholds and different rates. The thresholds tend to be $100,000 per state or 200 orders, but there are variations on that, and the complexity of accounting for GST in the States, again, varies considerably from state to state. In some states, there is a single GST rate for the whole state. But in some states, you then, in addition to that, you have county rates, and then you can have municipal rates. So in the worst case, you could have 4 different rates of tax due, and it's dependent. It goes right down to the zip code of the customer as to which rates apply. Canada is very similar in that it's by territory, but there is a federal registration which covers most territories but not all. They also have more than one different type of tax because they have GST, HST, and PST, which don't necessarily apply in all states. It's different territories. Different territories have different requirements, but other than that, it's quite similar. Australia is probably the next biggest marketplace that you might be looking at. They have a registration threshold of 70,000 Australian dollars, and there's actually two schemes. One is a simplified scheme, and that is applicable if you are fulfilling from outside of Australia and your orders are less than 1,000 Australian dollars. If you're using the simplified scheme, then all you're doing is reporting two numbers, the value of your sales and the value of the GST that's due. If you are storing inventory on Australia, fulfilling from within Australia, then you would use the standard scheme, similar to the UK in many respects, in that you account for GST on your sales, but you're also able to reclaim GST on your costs. I think that summarises that you're the major marketplaces that that you might be looking to sell in.
Okay, so I'm just going to give a brief overview of VAT and how it's impacted if you're drop shipping. So I'm talking specifically here around instances where your drop shipping supplier is holding the goods you plan to sell outside the UK. If the goods are inside the UK with your dropshipping supplier, then it doesn't really have any VAT impact for you. Everything we've talked about up till now is as it was. But if your dropshipping supplier is holding goods outside of the UK at the point of sale, then the VAT threshold of £90,000 in the UK doesn't apply for your business, and you would actually need to register for VAT in the UK before you start selling and charge and account for VAT from the first sale. It did used to be the case in the UK that there was such a thing as low value consignment relief, and that enabled dropshippers to avoid accounting for VAT so long as the individual consignments were less than £15. So in the past, it was generally the case that there was no VAT to pay on dropshipping, and not many dropshippers were registered, but it is now very much the case that as a dropshipper, you need to be registered for VAT as soon as you start selling in the UK. The exception to that is if your individual shipments will be over £135, then that's the point at which import duty kicks in on top of any import VAT. And in those circumstances, the customer would need to be the importer on record for those orders, and the customer would essentially pay the import VAT and duty through the courier, and you wouldn't need to charge VAT at the point of sale. Over to Elspeth for the FAQs, I think.
Thank you, Oliver. Okay, so we've got a few frequently asked questions that we're going to ask Elvers now, and then we'll move on to some of your questions at the end. So the first question is for Steve. When do I need to register for VAT in the EU?
Yep. Well, as I said before, if you're storing inventory in any country in the EU, then you have an obligation to register in that country, regardless of the amount of business you're doing there. If you're fulfilling from outside the EU, then you've got the option to account for that through your carrier. Otherwise, you would register for the IOSS, but that basically essentially is when you need to register for VAT in the EU.
And then Oliver, can I reclaim VAT on business expenses?
In short, yes, but to break that down a bit further and to take a step back, I suppose the first question there is what counts as a valid business expense, and the easiest way to identify that is you need to ask yourself the question: am I incurring the expense wholly and exclusively for the purposes of the business? I.e., if it weren't for the business, would you still be incurring it? And as long as you can say yes, it's wholly and exclusively for the purpose of the business, then it is a valid business expense that you can put through your company accounts. And then in terms of being able to reclaim VAT on that expense, you just need to make sure you have a valid VAT invoice. It's worth pointing out as well that if the purchase is for more than £250, then there are more onerous requirements in terms of what needs to be detailed on that VAT invoice.
Thank you. And Steve, last one. What happens if I make a mistake in my VAT handling?
Okay, well, that depends on the magnitude of the error. And there's two thresholds to consider here. One is if the error is less than 10,000, or for larger sellers, that threshold can be up to 50,000, but still needs to be less than 1% of sales. In those circumstances, you can just put the correction through on your next VAT return. But if you exceed those thresholds, then you need to inform HMRC, and you can do that on your Government Gateway account, basically completing what's known as a VAT 652 form. And on that form, you would have to include details of each return that contained the error, what the original values were on that return, what the new values are, and the nature of the error and how it occurred. If you have underpaid VAT, then there would be interest to pay. In terms of penalties, if it's a voluntary declaration, you haven't made this because HMRC have done an inspection and found an error, then if it's handled correctly, then you should be able to avoid penalties. But that means basically, completing all the information correctly and providing as much information and being as helpful as possible to get that error corrected.
Yeah, it's being as proactive as possible in that situation,
Yes.
isn't it?
Yeah, absolutely.
All right, brilliant. So you've heard quite a bit from Elvers today. If you are an e-commerce seller and you need help with your VAT, you're selling cross-border, you've got questions about compliance, get in touch with them. You can check them out at Elver E-Commerce Accountants.co.uk, and there's a big orange button you can click on to contact them.
This was a wonderful webinar. Thank you so much, Oliver and Stephen, for joining us and for sharing your expertise. I think this was incredibly valuable. And so I just want to say thank you to everyone for joining us today. And if you have any questions, please feel free to reach out to A2X or Elver E-Commerce Accountants. So thanks, everyone, and have a great day.